Welcome back, everyone, to Money and Markets. Before the break, both Sean and Rudy told us they expect that rally in soft commodities to continue. Our producer, Jen Amos, is here, and she's been talking to sources inside the farming industry. She joins us now with some picks and pans that can help you take advantage of the trends that they're seeing. Looking good, Jen.
Feeling good, Jamie.
Little Trading Places reference there for those investors paying attention to our commodities show. So, Jen, what are you hearing from the experts? Do they expect to see these prices continue to rise?
Yes, and particularly corn prices, as both Sean and Rudy predicted. Kevin Van Trump, who writes for agweb.com, points out that corn has the tightest balance sheet among agricultural commodities. He says that corn, quote, will either need to increase in price enough to significantly ration demand, or we need to add an additional 2 to 5 million acres to avoid even further problems. But there's evidence that corn producers won't be able to add enough acreage to meet demand. Another factor that may cut into corn supply is a bit more technical. As demand and prices have increased, some farmers have planted corn several seasons in a row, rather than a corn-soybean rotation, as they normally do. The result of that change has been a reduction in yields.
All right, that's pretty good inside information. So how can investors actually use it?
Well, if farmers can't increase their corn acreage enough, prices will go up. Rudy already mentioned the exchange-traded fund that invests directly in corn futures. You might also want to look at Archer Daniels Midland. ADM is one of the biggest U.S. farm producers, so it's diversified into all sorts of crops. But it's a major player in corn production, so it will continue to benefit from a rally in that market.
All right, Jen, so if corn doesn't get the additional acreage that it needs to meet this increased demand, then what crops are going to end up getting that land?
Wheat will get a lot of it, but of course wheat has its own supply issues, as we've seen from the production problems in Russia and Canada. But another crop that may see a boost in production is cotton. Kevin Van Trump at AgWeb predicts cotton farmers will increase their acreage next year at the expense of corn. So if you think that increased supply will weigh on cotton prices, you may want to consider shorting them. One pure cotton play available to retail investors is the iPath Dow Jones UBS Cotton Sub-Index Total Return ETN. It focuses on a single futures contract on cotton, so it can experience huge price swings. Be careful if you invest on either side of this one.
All right, Jen, thanks so much for being here.
Thank you for having me back.
Coming up next, Rudy and Sean are going to be back along with Tony Sagami to discuss other soft commodities, including one that could cause major upheavals if supply shortages continue. Plus, a closing comment from Martin Weiss. Money and Markets is back in just a moment.